having a proper trading strategy is one thing. Being profitable is another thing. Staying profitable is another thing. So when you get into trades, how do you feel? Is it too much anxiety? Are you just too hyped, too impatient? You just want to, close the trade when it's running in losses, or close the trade when you just see tiny, when you just see when the trade start running in profit, you just close it. Is that how you manage your trades? Okay, well, in this video, I'm going to explain how you can enter your trade, how you can manage your trades, when to break even, when to collect your profit and leave, when to hold your positions and take your full profit. And we're also going to break down the chart. I'm going to also show you how or what I look for in the market before I open any trade. So without further ado, let us get started. If you're new to this channel, please leave a like on this video, subscribe, and turn on the notification bell because we drop videos every day. This video was a special request from one of my subscribers. So if you have anything you would want me to explain or expatiate on, please leave it down in the comment section. I read every comment. Okay, let us get started. Let's assume we have a market structure like this, a downtrend like this, forming. We have structure breaks to the downside. Then the market pulls back in and taps into your key level. Now you're in this trade, right? The market is forming structure, internal structure inside your trade. Is forming internal structure, is producing higher highs and higher lows and breaking structure all the way down to your profit target. Okay, let's assume that this trade you got in here. This is where you enter your trade. This is your entry point. This is your entry point. So this is your entry, right? Okay, you have your trade here. Your stop loss just above the zone, and you're aiming for 1:2, or you're aiming for 1:3 or 1:4, whatever it is. Let's just assume that this is what you have going on. How are you going to manage this trade? Because 99% of the traders are going to close this trade at break even once this market starts pulling back up here. When the market comes down, they are smiling and everything. When it starts creating a lower high, which is a normal thing that a downtrend does, they'll get so nervous and they'll close this trade here because they just want to see the trade move straight to that take profit, which that is not how the market works. Look at what the market was doing here. You were not worried here because you were not in the trade. Now you're in the trade, the market is still doing what it's normally doing, and you're closing the trade halfway. So how do you manage trades like this when the market keeps pulling back up, pulling down? That's what the market does. So what you want to do is you look at structure. This now is a low that the market has made. This is a new low that this is a low that the market has made. The market breaks that low, pulls back to that low, and you can even take another entry there. You can open another tiny position here, put your stop loss just at your entry, and you put the same take profit target. This is how you manage trade to scale in and increase your profitability. But if you're comfortable with what you already have going on, then hold your trade until this level here is broken. So now when this first structure here has been formed and broken, you move your stops to break even because the market has already broken. So if the market is planning to pull back, it should pull back. Maximum should be here. It should not break this high. If it breaks this high, therefore it's changing character to the upside. So you should move your stops to break even just above this high here and keep your trade safe. When it breaks structure again to the downside here, you move your stop losses lower to the next high. You move your stop losses now from here, you move it down to this other high. Back on this line, you can put your stop loss now here because the market has broken structure again to the downside. So if this market now wants to move back up or wants to retrace, and go past this high, it should stop you out here with small profits. So don't see higher highs in the market, or don't see lower highs in the market and get scared, and you just get too feisty and you just rush and close your trades. You're going to miss out on a lot. So this is how you manage trades. This is how you scale in with more positions when you're running in profits. So in a scenario where the market just came down without any lower high or lower low, let me just demonstrate something here. In the case where the market, let's say you entered here, then the market pulled down like this. The market pulled down like this. You are not breaking even yet. Do you know why? Because this is the next structural low that the market has to break before you break even. And the market has not broken this low yet. So this market could as well bounce here and still go up to form a double top before breaking these lows. And now you've broken even. It has stopped you out. You only break even if the market has breached this low. Then you can break even and keep your trades in profit. If it has not done that, you are still at risk because this market might still want to bounce up there before finally falling, and it might still bounce here and stop you out, and that's totally okay. It's part of the game. You always lose. But if you manage your trades properly, you're going to minimize those losses. Okay, let's look at some charts. Okay, right here we are on USD JPY 4 hour. If you've been watching my videos, you're going to know that I always start from the 4 hour time frame to analyze my trades, and then I take my entries on the 1 hour time frame. That's my entry time frame. So here we can identify some key levels of the market that the market has formed here: a lower high, a lower low, broken, then retested it and broken again to the downside. Then came here again, another key level. I'm taking this one. I'm taking this low here. You see there's a low here and there's another low here. If you ask me why I'm taking this one, I'm going to tell you simply it's because this low has produced a high that is bigger, that is higher than the previous high. Are you understanding? This low generated this high, okay? But now this new low here has breached the previous high, making this low the boss. This is the main man. He's in charge now because he has taken out the previous guy. So he's not in charge. So I don't give a fuck about this level here. This is where I'm drawing my level to enter the market. So there you see we have a perfect tap into that level. And another thing is how to enter this trade after drawing these key levels, which I'm going to show you in this example. So let us draw another key level here. You know, you want your level to be touched as many times as possible. So now let us go down to the 1 hour time frame and see how we're going to enter this trade. What are the key factors that we are looking for before opening a trade? And when we open those trades, where do we put our stop losses? And where do we target? And how do we manage these trades? How do we hold these positions? How do we break even? How do we trail our stops? I've already shown you that in the beginning of this video, how to trail your stops. Now I'm going to show you how to enter a trade. This is how I break down my chart, and this is what I look for in the market. I trade a break and a retest of horizontal lines in the market, horizontal price levels that have been formed and broken. I trade break and retest. That is all I do on this channel. Okay, let us go down 1 hour and look for entries. Okay, now here we are on the 1 hour. Let me scroll back. Let me scroll back. Right about, let's take this one. Okay, let's take this one. This is a good example. Yes, so this is our POI, point of interest, where we drew on the 4 hour, and here we have a price rejecting this level here with an engulfing candle. An engulfing candle is a candle that closed bearish. Let's say we're in an uptrend, then we tap into our point of interest. Then this candle closed up here, and then the next candle opened and closed lower than this one. This is our engulfing candle. So this is what you want to see, and this is where you are entering the market on this engulfing candle. Your stop loss just above the highs. So let us look at that right now. So now we have an engulfing candle formed here. If you look kindly, you're going to see a black candle here that's been formed on the 1 hour time frame. So we're going to enter immediately that candle closes, and our stop losses just goes above our level. Then we're aiming for 1 to 2 in the market, which we got here perfectly. Now, running in this trade, how do you manage this trade? If you look, let me zoom in. Okay, how do we manage this trade, guys? Because if I'm running in this trade, I'll not just like sit back and wait for this thing to hit my target while I'm still having money here that I might lose. Okay, so what I'm going to do is I'm going to wait for structure to be broken. I'm going to wait for structure to be broken so I can move my stop losses. This is a low that's been formed. This is a low. This is the recent swing low that's been formed. Then a swing high that tapped into our order block, into our point of interest. Then we got this sale. Now we can only move our stop loss to break even when this low here has been taken out. If this low has not been broken, this loss, this open space here should still be there because it might bounce here, tap there before falling. Okay, that is how you trade it. This is how you hold it. But now, once this level here has been broken, then I'll move my stops to break even quietly, just like that. Now I'm safe on this trade. And the market just pulls back. If the market has to break this level and come back, it should not break these highs. Maximum should be here. It should tap here and fall. If it doesn't, then you want to get out of the trade. You want to exit. So your stop loss should be around here. You should place your stop loss around here. This is where your stop loss should be. Once this low gets taken out, you should keep your stop losses there. Secure that small profit there because that is where the market, this is the limit. The market should not break that high. Okay. That is how we manage that trade. Let's see. Let us get in another trade here and see how we can manage it. Okay, this is our 1 hour time frame. This candle here is kind of looking very, very, very big. In situations like this, what you want to do is you want to take 50% of this level of this candle. If this is an engulfing candle, you want to take 50% of this level to trade off of it. So here we can see that 50% is right up here. So there, I'm going to enter my trade. Once the market approaches the 50%, I might just keep my stop, my limit, my sell limit right there, my sell stop. Then I'll put my stop loss just above, just on top of this zone like I did with the previous one. Then I'll look for 1:2. When your engulfing candle is too massive, measure 50% of it and place your sell limit or buy limit order. Yes, you should put an order in the market. Once you see that your level has been tapped in and these massive candles come out like this, you just know that this is volume that the market is trying to introduce. Bearish, the bears are taking control of the market. So that's why we have huge volume like this. But you don't want to enter this on this candle right down here. You want to take 50% of it. So if the market never gets there, then don't take the trade. Okay, now we have a break of this level. Now we're waiting for a retest to take a good trade to the downside. The market comes and it breaks above it. I would like to see the market reapproach it back before I can grab a sell. So I wonder if that happened. Okay, it did here. It did tap in and reject it. And here I would rather take my trade once I see the candle close out of that zone because it might still tap in and break and retest it from above. So here I would wait for the market to close out of this zone with an engulfing candle like this black candle here. Then my stop loss would be just on top of that zone. Then my take profit will be 1:2, which in this case, this market turned out to be a loss, to be a losing trade, which is fine because we cannot take 100% winning trade. This is not a holy grail strategy. Okay. So as we can see, the market, we're caught in consolidation because right here, the market is consolidating. So guys, this is how you take trades. You manage the trades. You follow structure. I could only break even on this trade. As you can see here, this trade I got stopped out here is because I was looking for this low here to be taken out first. If this low got taken out, retest, then I would have broken even on this trade right here. So the market ran in profit. I was running 1-to-1 in profit already, and I was anticipating these lows to break, and it did not break. So that's why you take the loss. That is how you manage your trades, guys. This is how you manage trades. So I hope you've learned something. I hope you've picked out something from this video, and I really hope you subscribe, like this video. It keeps me going, and it also supports the channel in a very, very massive way. Thanks.